Whenever I talk about cash flow and cash flow forecasting specifically, sometimes I will get participants or viewers just very confused about where they start and how can they even know. It's sometimes that they start to think like, how can I even know what to forecast, when my money is going out and when money is coming in? It all just seems so random all the time. But there are rhythms to our cash in our businesses. And what this video is about is it's going to be about how to identify those regular patterns of money going in your business and money going out of your business. The money going in is your revenue, the money going out is your expenses. And actually, when we really dissect a lot of our expenses, there's a lot of predictable patterns. And so we call that cash rhythms. And so that's what this video is about. This video chunk is coming from a cash flow workshop that I did a little while back. We already showed you guys one snippet last week or maybe 2 weeks ago. I can't remember. That was a snippet from this same webinar. So you can go and check that out if you haven't already looked at that. But this is another stage of planning your cash flow. And this will be super helpful for you so you can start to identify the patterns of cash in your business. It's not that hard. And I wanted to share this with you guys. There's also a worksheet available. You can grab everything in the description box below. This is a workshop that I have paid, and you can still buy it if you want to. We've discounted it significantly, but I thought I would just start taking little pieces of it and putting it up for free on YouTube. So you don't really need to buy the workshop, but if you would like to have everything in one place, you can go and buy it there. Okay. All right. Well, without further ado, let's go ahead and get into this snippet of the workshop talking about cash rhythms. Here we go. Okay. So let's talk about cash rhythms, the ins and outs, the flow. We want it to be like this. Well, actually, so I was saying, I actually want it to be like this with your cash flow so that when you draw a straight line, it's increasing over time. That's what I want for you overall, is that over time, your cash is increasing in your business, but there's always going to be this up and down dip. Okay. And we want it to be somewhat predictable and somewhat regular. And I think every single one of us can identify some patterns. And so pattern recognition is what we're going to work on here. So the first thing I want you to bring awareness to is, when does your money come in? Your money comes in from different places. So we kind of already talked about what is your revenue model, where is money coming in from. So now I want you to think about the cadence at which it comes in. So if you have invoice clients, how often does that come in? Does it all come in one big chunk? Do you have like one or two clients? One pays you at the beginning, one pays you at the end. Do you have sales from products that are coming in daily? Do you have income from other sources that maybe you have daily sales, but you also have one consulting gig that pays you on the 20th of every month? What does that look like? I've got a spreadsheet for that. So we're going to talk about that. And then also think about when the money goes out. And these are some of the big categories that I just thought about as like the big stuff that people need to plan for. Payroll is one of the biggest things. And this is the thing that, like, I think if you were to poll all of the business owners who ever have had employees, probably the thing that makes them most stressed out about cash is having enough money to cover payroll. They'd hate to be at a place where they have to take money out of personal savings or have to tell somebody, hey, can you get your paycheck late? Nobody wants to have to do that as a business owner. So that is number one. Think about when your money goes out. If you have rent, if you have employee benefits, those are sometimes timed differently from payroll, because like a 401k would happen at the end of the month, beginning of the next month. When are your credit cards being paid? Cost of goods sold. Do you have, like, we've got a couple product businesses over here, and those product businesses are going to have big chunks of money they're going to have to pay for their product. That's cost of goods sold. You might have draws from the owner, especially if you're a sole proprietor. You will be taking your pay as an owner's draw, and that does not show up on the P&L. And so sometimes people forget about it, and then they're like, why don't I have any money? Debt payments. If you have like EIDL, repayments are going to come up soon. If you have, any kind of line of credit or loan, if you have, maybe you own a vehicle in your business or something like that, you're going to have loans that you need to pay on a regular cadence. Subcontractors who work for you, they have their own terms. And then just office expenses, utilities, and then marketing. Some people hire consultants for marketing and things like that, and that can be on different terms as well. Obviously, there's lots of other expenses that you could have in your business, but these are kind of like the top ones that I see really common. I am going to show you guys the spreadsheet, and then we're going to take a few minutes to actually work it. Let me pause real quick and look at some questions because I think there was one I missed. And e-commerce. So there's an e-commerce question, but we do have a handful of clients that ask for terms. I will revise my net 30 agreements to set an earlier due date. Also, I will start sending due date notifications. Yes. Okay. This is an action that an e-commerce business owner can do right away. Revise net 30 agreements to set an earlier due date. And then also start sending due date notifications. Yes. Like sometimes, like we're all people here. Sometimes we forget and sometimes we need reminders, and nobody is going to be mad about you sending a reminder about an invoice that is outstanding or an invoice that's almost due, especially if it will help them avoid a late payment fee. So they will actually thank you for it. So thanks for that. I love the action. We're going to move over to the spreadsheet. My spreadsheet's going to look a little bit different from yours because I've got an example in here. So if you've gotten my cash flow worksheet before, mainly this is what you saw. I've made some modifications to it from my older version, but I will walk through what's here. So what you see, there's some just general notes for use. Some of this is a little bit casual language, but just kind of keeping in mind how to use this tool. This cash rhythms is completely new, and it goes off of this concept of like, how can we identify taking action on accelerating and decelerating these two topics? And we're going to give you some time to work on this. The next thing is this is the forecasting piece. So this is an actual Excel tool that will help you forecast your cash. We're going to walk through some examples. And this is the month by month one. So what I like to tell people is when your revenue model is working and you always have excess cash, monthly is great. I don't think you need to do a weekly one, but when you are kind of getting tight in places or feeling the strain of cash, I would say weekly is a better place for you to start. Okay. So maybe start with weekly if you're feeling like things are tight, and then you might be able to identify some places to improve cash flow. And then once the revenue model is all working, you can get to a place where you're just updating it monthly. And then it becomes a little bit more of a proactive decision-making, scenario-making tool, which I love. So cash rhythms, we're going to spend some time on this. And I am using my business as an example here, throwing in some extra stuff that I just kind of threw in some other examples down here for expenses too. In my business, well, let me show you how I set this up first. So we've got a list of incoming cash. So this is where I want you to actually look at your bank statement. And I want you to look and say, what in this bank statement is income items? And usually some bank statements are set up so where they have incoming is in one section and then outgoing is in another section. So you could look and say, what is this from? What is this from? What is this from? And go through it just like that. Okay. And then you can list those things here. So if they're different things, so if they're all client payments, then you would just put client payments in there. Or if it's all product sales, you just go and you put product sales in there. But if you've got money coming in from different places, then you want to list those things in separately. So for example, workshop sales. So I use a different platform that you guys have used called Podia to sell workshops and worksheets actually as well, which is down here. So in that situation, I would have those, I'd probably do it like this: workshops, digital products, product sales. Okay. So in that, actually, I know why I did that. Never mind. So I was giving an example. Okay, workshop sales. So workshop sales would be something like this workshop here. If we did this and I had like a promotion, so let's say I was trying to get a certain number of people into a workshop at one time, I could, now this is ad hoc, it's not on any kind of regular cadence. And the day would be depending on when I did it. But a way I could accelerate cash is strategically plan when I want to do a workshop. So if I was looking into my forecast and I was like, man, my revenue is looking too low in July, I might want to plan a really great workshop for July so that I could fill in my cash flow problem that I'm going to predict in my cash flow forecast. Okay. So this is the power of planning. I can say, well, what do people want and what would be a great workshop, and, set some goals for trying to sell a workshop in that time. I get a little bit of payment from Google AdSense every month. And with Google AdSense, that money comes in on a very specific day. I think it's the 20th or the 22nd. So I can't do anything about this. There's going to be some things that we cannot change and we just have to work around. So I can just try to increase the amount and try to get more views. The next thing is client payments. So client payments come in monthly, and right now they're being deposited around the 10th of the month for me. Now, if I want to change that, I need to shift my billing to earlier in the month. And I think I mentioned earlier, I bill on the 5th of the month, but why am I billing on the 5th of the month? Why don't I just bill on the 1st of the month? I don't know. I don't know why I set it up that way. I just thought it sounded nice. So if that was a problem for me, I could shift that earlier and get paid on the 5th of the month, because it takes about 5 days for the processing from when the credit cards go to when it actually hits my bank. So if I needed that, this is an action I could take. And then I sometimes earn commissions on softwares. This is that commission piece that I really have almost zero visibility into who is doing what. And, it's incredibly small and unpredictable amount of income. So I really don't have tons of power here. So I could review the agreement and see if it's within expectation. I could check to make sure that what I'm getting is actually correct, but I don't have a lot of power in this situation and not a lot of control. So there's not a whole lot I can do besides to accelerate that, except for just try to do more of it. But that could be a lot of extra work that might not actually be worth it. And then worksheet sales. So digital product and worksheet sales. These are kind of just the stuff that's available at any point in time for anybody to buy. And this, I might get maybe one sale a day or something like that. And so that stuff comes in once per day. With that kind of stuff, make sure you're on or that you're not doing manual transfers and that things are automatically getting dumped into your account. So if you're doing PayPal builds up and then you have to manually transfer. Something like Stripe just automatically puts money into your account really, really regularly. I think like with Shopify and e-commerce, I have e-commerce on here. I think with Shopify, you have maybe an option to say when you want those deposits. So make sure that you can check with that and see how you could accelerate that money getting into your account. And then outgoing cash. These are just some things within a cadence. So payroll, I pay payroll semi-monthly, 25 times a year. And these are drop downs. I've actually got some options for you guys here, not weekly. And this is really just for information for you to figure out like what you could do to change things. So I pay on the 5th and the 20th. If I change my payroll cycle to the 15th and the 30th, would that help? I don't know. It's an option. Retirement savings, that's one for the previous month. This is something too. So, I pay rent, but it goes on my credit card. So that's for a co-working space. And then credit card payments are on different days. And these are kind of just examples at this point, but you could modify with a credit company, like we mentioned. Subcontractors, I pay my subcontractors at the end of the month after the work is complete, and I guarantee payment by the 10th of the following month. So they get paid, but not, they're not prepaid for the work they're doing. Tax savings, this is where I move money into my tax savings account, and then I'll pay money out, take a draw and pay money out to the IRS. The real thing there is getting accurate tax estimates. There is a question that says, is there a way you recommend for estimating or saving for taxes? Another bank account? Yes, and yes. I actually have an estimated tax video that I can send to you afterward, Nina, but it kind of talks you through how to estimate your taxes. I do love a tax savings account. So that concept came from Profit First. If you've read that book, I don't love everything in that book, but I do love the tax savings account. And the tax savings account is a separate savings account that after every month I look at my profit, I take a percentage that I think is pretty accurate based on like what I think is going on. You might need kind of a recommendation from your CPA here. I usually say between 20 and 25%, depending on the type of entity. And then I move that number. I take the profit. So if the profit was $5,000, if I take 20% of that, that's $1,000. I would move $1,000 into my tax savings account. Okay. So that helps me know that I'm saving for those taxes and I'm not spending that money on other things. And then owner's draw. I can plan draws based on taxes and shares of profits only. So if I'm doing like an extra distribution, I would definitely look at my cash flow forecast for the next couple months, make sure it's pretty accurate, and then decide what the draw would be. Okay. So if you're still taking most of your profits out of your business as a distribution, definitely do that after looking at your cash flow forecast. Okay, well, thank you guys so much for watching. If you aren't already subscribed to the channel, I would love to have you here as a subscriber. Hopefully this has been helpful to you. I like to bring helpful content to my audience because I want to help you guys, specifically with cash flow, because I feel like cash flow is such a game changer. If you can really start to understand the ins and outs of your business, you'll be well on your way to all the success you would like to have in your business. So if this is helpful, please give it a thumbs up. Would love to know that. And then if you have any other questions, please put them in the comment section below. And that's it. Talk to you later. Bye.